First of all, thanks for having me. I always like coming. I'm glad. I gave Marcia a hard time. I refused to come in December. My husband said if I came in December, I couldn't come to Christmas at the house. Who had the burnout? Who has the burn? Who has the fire? Can I tell you a great story? We had an arson fire in August, and I bought a house in Middletown 4 years ago. The lady who was selling it was dumping her mother into a nursing home. She came in from California, and all she wanted to do was cash out the house and leave. And so I told her I was a cash buyer, but I couldn't go higher than 30. She wanted 55 to 60. She took my 30, dumped her mother, took mom's toothbrush and 2 best outfits, and left everything else. My insurance agent happened to be Grange, and I've used the same insurance folks for 20 years, browbeat me into getting replacement value insurance. And I bitched and moaned and complained. It was expensive. And this house was a cute little house. I mean, it's 900 square feet. It was plaster walls. It had crown molding. It had hardwood floors. So when my husband met with the insurance adjuster after the arson fire, he said, and it only burnt out the back of the house, so it's $10,000 to $12,000 in repairs. The insurance adjuster said, well, you know your policy covers you to tear down all the plaster and put up all new plaster. I know you're not going to do that. And walked through the house. Your insurance policy, covers pulling up all the hardwood floors and putting down new hardwood floors. I know you're not going to do that. So we had the replacement value on this house was $133,000. Now, mind you, I paid $30,000 for it, so you can see how unhappy I was paying the insurance premium. Grange wrote me a check for $118,000. Oh my gosh. I'm sorry? That's what it would cost to replace it, and that was the kind of insurance I had. So to tear off all the plaster and replaster it, to tear out all the hardwood floors and put down new hardwood floors. We sold the house for $10 grand, and Middletown has $15,000 of my money, which I'll get after they rehab it. So, yeah, I made money on arson. I didn't think that was possible. In fact, I wish I could find out who it was. I had some other properties I'd like to get rid of. Are we on tape? Can you put that on YouTube? Oh my gosh. Okay, so basically tonight, I'm going to focus on what you should be doing as you approach year end, what moves you should be making, what things you should know when you're getting ready for tax prep. Because there are some things that are critical under the new tax bills and under tax legislation that can cause you real problems if you don't act. So we're going to talk a little bit about legislation since last November. We're going to talk about what the IRS is focusing on as far as audits. And then we're going to talk about some interesting tax court cases. And if you moved ahead in my handout, you'll see that the last couple pages of slides are crazy tax deductions. So we're going to talk about which one of those are deductible and which ones aren't. There we go. Okay. So these are the 3 tax bills we're going to talk about. We're going to talk about the Consolidated Appropriations Act. We're going to talk about the bipartisan budget bill. And then we're going to talk about Tax Cuts 101, as President Trump calls it, the Tax Cuts and Job Act of 2018. How many of you are involved in partnerships? I know a few of you are because I do a few partnership tax returns for people in this room. As part of the, well, first of all, the Consolidated Appropriations Act, as the name indicates, this was one of the spending bills that kept the government open. But added on to this bill was a Treasury suggestion, which deals with partnership audits. And subsequent to the bill, Treasury issued regulations. If you think about it, if the IRS audits a partnership, they then have to turn around and audit or make an adjustment on all the partners' tax returns. Well, that can be quite cumbersome if you